Do you think that those growth numbers and any potential upside in growth, Taimur, is fully priced in all asset classes across equities, bonds, and even things like commodities?
So, Mandy, on the various asset classes, clearly on the most amount of action right now is in the commodity side, because the commodity was the big reopening trade. We saw a huge amount of action in the metal space and energy space, and there the supply demand issues are getting resolved. You see China cracking down on speculative activities. You see OPEC members beginning to agree on increase in production. So the classic, demand crunch will lead to a supply response. That narrative is beginning to play out. And that's a good, healthy development. So therefore, if commodity prices were to fall tomorrow, I would not attribute that to a negative growth narrative. I would just attribute that to a favorable supply response, which is inevitable at any economic cycle. As far as the equity markets are concerned, there, of course, we have some substantial amount of liquidity, and rates being where they are, the equity risk premium does not look excessive to me. If the rates were to go up, then equity valuation models will start flashing sell signals, but we're not there yet. What you saw on Monday is more of a return of volatility around the Delta variant concerns, not necessarily, in my view, a major vote against the growth narrative. As far as the fixed income market is concerned, and I guess the real story is what's happening in the 10-year yield in the US, I don't think that reflects growth concerns either. That is central bank buying, huge amount of demand from Asia. You see it
Right.
in the market hours. The moment Asia comes to work, US rates rally because in the absence of conviction about other asset classes, you at least want your capital to be safe. And from a central bank perspective, from a large asset manager perspective, get that 1.2% and stay safe.
And of course, if you've got a bunch of central banks which are on the cusp of becoming more hawkish and actively taking moves in that direction, then good news on the growth front can often become bad news for the markets. So purely for the markets, what do you think is the biggest downside risk, Taimur?
So, Mandy, the hope this year was that there will be a bit of a passing of the mantle, if you will, that you have all the good news parked out of the U.S. priced in. Then we see reopening in the emerging markets world, led by Asia, and therefore, capital would come to this part of the world. And even if rates were to go up in the U.S., the higher growth narrative expectation in Asia would balance the flows and market sentiment to some extent. The problem is and I'm sitting and talking to you from Singapore, is a canary in a coal mine. Very high levels of vaccination rate, and still outbreaks happening here and there, and the authorities being forced to come up with mobility restrictions on a repeated basis. I mean, if this is the case for a country with high rates of vaccination, what does it mean for countries with low rates of vaccination, which, by the way, is a norm in Asia, Singapore being actually an exception? So even in the Northern Asia, advanced countries like Japan, Korea have very low rates of vaccination. So I think that's the major issue or potential spoiler, that the reopening narrative for Asia simply will not play out this year. It's a 2022 story, and therefore we would have to reconsider our expectations of various end year targets for asset prices in Asia.